welcome back to the online class. So we solved problem number 1 in the previous class, right? So we'll move very fast with this chapter because we have only 2.5 months to go to the semester examination. So we have to complete the syllabus by 31st August. So I just completed one chapter and I had 5 more chapters to go. So I'll go little fast. Okay, if you have any doubt, you please call me up, or you want, you can. I can arrange you for a Google Meet class. If you want, you can directly approach me for the Google Meet class. Okay. So now we'll move on to the next problem. So take down the next problem. Copy down this problem, that is calculation of value of unsold stock of consignment. So take down fast. We have to complete problem number 2 as well as 3. We have to move to the illustration number 3 in this class. So take down fast. Okay. So in this problem, you have to calculate the value of unsold stock. So given the format of calculation of unsold, see, unsold stock or closing stock or consignment stock, one and the same. Okay, unsold stock means it is nothing but closing stock. It is also known as consignment stock. Now we read the problem. Goods sent on consignment 500 units costing rupees 400 at an invoice price of rupees 500. Now actual cost is 400, but he consigned at the price of 500. In a sense, listen carefully. Consignor incurred 400 rupees to manufacture 1 unit. Okay, so when he consigned the goods to the consignee, he is not selling, he consigned at rupees 500. The difference what is there, the 100, that is load price. We term it as load price because he is not selling the goods, he is just consigning the goods. Now any calculation if you are doing before the goods is received by the consignee, then you have to take 400 as the value of the goods. If the goods has been consigned, then you are doing any valuation, then you have to take 500 as the cost of the goods. I repeat, if any calculation is done before the goods received by the consignee, in the sense consignee ಗೆ reach ಆಗೋಕ್ಕಿಂತ ಮುಂಚೆ ನೀವೇನಾದ್ರೂ calculation ಮಾಡಿದ್ರೆ, you have to take 400 as the cost. Why? Because that 500 is recorded when the goods has been consigned to the consignee. ಅಂದ್ರೆ consignee receive ಮಾಡಿದ ಮೇಲೆ that 500 should be recorded. But before that he incurred cost of 400. So any calculation before the goods received by the consignee 400, after 500. Now which calculation the 400 is used? Only one calculation. Okay, the 400 can be used in only one calculation, that is calculation of abnormal loss, and the loss if it is incurred before reaching the consignee. You see here, goods lost in transit. Now what is transit? Transit means goods still moving. It didn't reach consignee, innu adu move aagta untu. It may be the roadways or the waterways or the airways, any mode of transportation. If it is still moving or it is not reached the consignee, that is what transit. So when you calculate the abnormal loss for 500 units, you have to take the cost as 400. Why? Because the goods has not reached the consignee. That is the idea behind it. Now, when we calculate the closing stock, you have to take 500. Why? Because after reaching the goods to the consignee, after consignee sells some units, the what left with the consignee, that is what the unsold stock. So it is reaching the consignee means you have to take 500. So if the abnormal was incurred before the consignee receive the goods, in the sense it may be in the transit or it may be in the hands of consignor, then you have to take 400, that is excluding load price. If it reaches the consignor, then you are making any calculation, then you have to take 500 as the cost. Now one more point. Now you just see the format of abnormal loss. See, listen, in any problem, first you have to calculate abnormal loss, then you have to calculate closing stock. Okay, if the abnormal loss is not given, then it is well and good, you just calculate closing stock. But you have to calculate abnormal loss and closing stock, then you have to go for the ledger accounts. Okay, in case of the vast problems, they may ask for 12 and 24 marks. So you have to calculate abnormal loss, then you have to calculate closing stock, and then you have to go for the ledger accounts. Now in this problem, so there is a goods transit, right? So you have to calculate, there is a transit, goods lost in transit means it is abnormal loss. You have to calculate abnormal loss. Now you just see the format of abnormal loss. What is the format? First you have to take cost. So cost, you know, find 50 units into 400, because you have to take 400 because the goods lost in transit, it didn't reaches consignee, so you have to take 400 units. Then you have to add, proportionate non-recurring expenses of consignor. That consignor all expenses is not recurring, so you have to take. Now next you have to add proportionate non-recurring expense of consignee, and within the bracket I gave, if the goods lost after reaching the consignees go down. Okay, only when the goods reaches the consignees go down, then if any loss occurs, then only you have to take this item. Now the goods lost in transit means you are not supposed to take consignee's non-recurring expenses, because consignee not received the goods. So why we making consignee liable to pay the abnormal loss? For example, if I'm sending goods to you, the goods has been lost in the middle of the road, in the middle of the journey, it is in the transit, you not yet received the goods. Whether you are ready to pay the loss? No. Whether you are ready to bear the loss? No. Right? Because you didn't receive the goods. It is not your mistake. The abnormal loss is taken place in between. So you are not liable to that because you didn't receive the goods. So only when goods has been received by the consignee, then if any abnormal loss occurs, then you have to take the proportionate non-recurring expense of consignee. Okay, these 2 points you have to keep it in mind. One, that is when we have to take invoice cost price, when you have to take invoice price, and the second one, when we have to take proportionate non-recurring expense of consignee. Okay, so now we'll move to the format. Okay, you just draw the format, that is calculation of abnormal loss. Draw the lines. Okay, so this is the first item, that is cost of goods lost. So 50 into 400, because goods lost at the time of transit, so you have to take cost price 50 into 400, that is 20,000. In units column you write 50. Okay, so units column 50, the cost will be 50 into 400. The cost of 1 unit is 400. Okay, next you have to add proportionate non-recurring expense of consignor. Now how to calculate proportionate? See, you write there, if you want to take down, non-recurring expense of consignor, that is 40,000 is given in the problem. So 40,000 is the non-recurring expenses incurred by the consignor, right? That is for 500 units because he consigned 500 units, right? He consigned 500 units, so he incurred the total non-recurring expense of 40,000 for 500 units. See, how much units you consign, that much cost you will incur. So 40,000 if you cost incur, then how much goods consigned? 500. You want what is the cost for 50 units because your abnormal loss is 50, correct? Your abnormal loss is 50. You want just non-recurring expense of 50. You can't take the non-recurring of 50,000. So for 50,000, sorry, 50 rupees, how much? You have to do the cross multiplication. You take down this, okay? 40,000 rupees, 40,000, that is for 500 units. That is units. This is units. And you are calculating for 50 units. For 50 units, how much? 40,000 into 50 divided by 500. So that is what I written here. 40,000 into 50 divided by 500. So it comes to 1,000. So next you have to add proportionate non-recurring expenses of consignee. Here we are not taking the non-recurring of consignee because the reason behind that is the goods has been lost in transit, means it didn't reach the consignee. So consignee ka share is not added to the cost of goods because the goods has not reached the consignee's godown. Okay, if you do the total, that is the abnormal loss. So first, if there is any abnormal loss, then you have to calculate the value. Okay, after this you draw the lines for format of consignment stock, that is unsold units. Okay, first you have to take the cost of goods consigned, that is 500 cost, and the invoice price is 500. So 500 into 500, 2,50,000 in the amount column, 500 in the units column. Okay, what next? Next, you have to add the total non-recurring expenses of consignor. So consignor's total expense will be the non-recurring expense. There is no recurring expenses of consignor. So all the expenses incurred by consignor is non-recurring. Next, you have to add total non-recurring expense of consignee. So consignee, here they have given non-recurring expense 50,000. So if you add, you will get 500. That is 3,40,000. This is similar. You did it in the first previous class, right? The first problem what you solved, similar one. Okay, what next? Next, you have to deduct the abnormal loss. So abnormal loss we calculated. That is working note number 1. 50 units, 24,000 is the amount. So If you deduct, you will get 450, that is 3,16,000 is the net figure. From that you have to deduct normal loss only units, normal loss only units. So units they have given. If you deduct, you will get the effective units, means 410 is the ready units that you can sell. From that, if you deduct units sold, you will get the closing stock units. Next, you apply the formula and find the value, just like what you did in the illustration number 1. Now you find the value of closing stock. So do it fast, just 2 minutes. Okay, so formula, that is value of closing stock is equals to net cost of goods sent into unsold units into effective units available for sale. If you forget the formula, you apply the cross multiplication, then you substitute the value, that is 3,16,000 into 30 divided by 410. The value what you get, that is the closing stock value. Okay, so if you forget the formula, you just apply the you just cross multiply the values, that's all. So 23,122 is the value of closing stock. Okay, that is illustration number 2. Next we'll move on to the illustration number 3. So you just copy down the third problem. You take down this problem. So here it is behalf of, okay, this is off. I think this is not visible properly. Yeah, this is off. You take down this problem take down this problem fast, just 3 minutes. Okay, so first we'll discuss the problem, then we'll solve the problem. Okay, you see there, Sakshi of Mumbai consigned 2000 barrels of lubricant oil costing rupees 650 per barrel to Sonakshi of Chennai on 1/4/2020. Now Sakshi is consigning the goods to Sonakshi. So Sakshi is sending the goods. So Sakshi is sending the goods to Sonakshi. Okay, so Sakshi is the consigner, Sonakshi is the consignee. Sonakshi is the consignee. So you need to know who is consigner and who is consignee because you have to prepare the ledger records, right? Okay, now. So 2000 barrels at rupees 650 per barrel. So there is no invoice price. So 650 ka 650 they sell. So there is no load price. Okay. So Sakshi paid rupees 80,000 as freight and insurance. Sakshi is consignor, so anything she pays, that is non-recurring expense. Okay. 40 barrels were destroyed in transit means abnormal loss. You have to calculate the value of abnormal loss. Just now we solved that problem, right? Calculation of abnormal. Insurance claim was settled at rupees 24,400 means you incurred some loss. The insurance company refunded the loss. Okay, insurance company claimed the policy. Now this 24,300 you have to take in abnormal loss account. See your abnormal loss account, you have written by bank means you sold the loss and you received 24,300. This figure will affect only the abnormal loss account and paid directly to the consignor. So consignor received that. Sonakshi took the delivery on 12/4/2020 and accepted the bill drawn by her for Sakshi, drawn by Sakshi 6 lakh. So Sakshi drawn the bill on Sonakshi, that is 6 lakh. Okay, she already drawn the bill. So we have to pass the journal entry. We have to post it to the ledger 6 lakh. 36/2020, Sonakshi reported that 1,700 barrels were sold at rupees 950 per barrel. So 1,700 sold at 950. So this is the sale. She also incurred following expenses on behalf of consignor. So now who incurred? The Sonakshi incurred on behalf of consignor means Sonakshi incurred the loss. Now in this, first you identify the non-recurring and recurring item. Why? Because if you are calculating closing stock, you have to take the non-recurring item of the consignee, right? So now you remember what is non-recurring expenses incurred till gate tanaka goods bandu in goods haki in the ogdavaru. Okay, till gate they come, they drop the goods and they just move that. After that, what expenses you incur, that is recurring. Now clearing charges. So clearing charges means the goods as arrived till gate. Now you have to remove the goods, you have to clear the goods uh, from the vehicle. It may be a truck, it may be a lorry, anything. You have to remove the goods from that. That is clearing. I'm clearing the goods. So clearing the goods is the non-recurring because that process is done in gate itself. Goods gate ಗೆ ಬಂದಾಯ್ತು, ನೀವು ಅಲ್ಲಿದ್ದ goods ಅಂತ ತೆಗಿಬೇಕು. So that is non-recurring till gate. Advertisement is given later. After you receive the goods, you keep the goods in the warehouse, then you give the advertisement, then you sell. So this is done after you receive the goods. So this is recurring. Wages you pay for the workers uh, to assemble the goods, to keep that goods in the warehouse, to bring the goods, to sell the goods, or to help them in the warehouse. So this is recurring. So only one item that takes place at the gate. Gate ಅಲ್ಲಿ ಆಗುದು ಒಂದೇ item, that is clearing charges. Then 2 items after receiving the goods. So only 15,000 is the non-recurring and remaining is the recurring. You just note down there. Non-recurring clearing charges, advertising and wages, recurring expense. Okay, yes, here next. 20 barrels of oil were lost due to leakage, which is considered as normal loss. So normal loss only used when you calculate closing stock. Okay, 20 barrels you have to take it as a normal loss. Sonakshi entitled to a commission of 6% on all the sales affected by her. How much sales she do on that 6%? There is no del credit commission. Sonakshi paid the amount due in respect to the consignee. So later she will pay the money. Now they asked you to prepare their ledger records in the books of Sakshi and Sonakshi. Sakshi is the consignor, Sonakshi is the consignee. So in the books of Sakshi we prepare consignment account, we prepare consignment account, consignee's account, that is Sonakshi's account, goods sent on consignment, abnormal loss. In Sonakshi's book, we prepare commission account and consignor's account. Okay. Before preparing ledger account, if there is abnormal loss, then first you have to calculate the value of abnormal loss, then closing stock. So we already solved two problems on the valuation of closing stock, and we solved one problem on the valuation of abnormal loss, right? Now I will give 5 minutes to you. You see the format. Okay, with that 5 minutes, first you see the format thoroughly, then you calculate what is the abnormal loss and consignment stock. Okay, so it's now your time to solve the problem. Ledger account I will do, but working note you have to do. Now start. So do it fast. With the information you calculate the abnormal loss and consignment stock. Okay, so let's start. I think you completed with the abnormal loss. Okay, first I have to take the cost of goods lost. So the goods lost 40 units, the cost of one barrel, that is 650, so it comes to 26,000. And the proportionate of non-recurring, so consignor incurred 80,000, that is for 2,000 units, and we want it for 40 units. So cross multiplication, 80,000 into 40 divided by 2,000, it comes to 1,600. Then you add proportionate non-recurring expense of consignee. So here we are not adding consignee's non-recurring expense because the goods lost in transit. So we are not adding. So it comes to 40,37,600. Closing stock. The cost of goods consigned 2,000, that is of 650, and there is total non-recurring expense of consignor is 80,000. Total non-recurring expense of consignee, that is only 15,000, that is clearing charges. Okay, clearing charges is the only non-recurring expense incurred by consignee. It comes to 2,000, the total 13,95,000. Abnormal loss you have to deduct, that is 40 and 27,600. It comes to 1960. Normal loss only 20 units, only units. Then units sold, the effective units you will get. So if you do the cross multiplication, you will get the closing stock. So the formula, that is net cost of goods sent into your unsold units divided by effective units available for sale, that is cross multiplication. If you do the cross multiplication, you will get the value, that is 1,69,163. Okay, so next you draw the lines for the ledger account. Draw the lines in the books of Sakshi, that is consignor. In the books of Sakshi, Sakshi is the consignor. So first you have to open the consignment account. Okay, so now first you have to start with opening stock. There is no opening stock, right? You read the first line. Sakshi of Mumbai consigned 2,000 barrels of lubricant oil costing rupees 650 per barrel to Sonakshi. So first entry, that is goods sent to consignment, that is two goods sent to consignment, because there is no opening stock. Okay, now if there is any load price, then here you have to write, if there is any load price, then here you have to write buy goods sent on consignment 650 into 2,000 into the load price. Okay, but in this problem there is no load price. Next we'll move on to the next one. See there, the next sentence, Sakshi paid 80,000 as freight and insurance. Now Sakshi paid 80,000 as a freight and insurance. So expenses you have to debit. So we are preparing Sakshi's in the books of Sakshi. So we cannot write Sakshi's name. So we write to bank account. So expenses to bank account. Next, 40 barrels of were destroyed in transit. That is nothing but abnormal loss. So now abnormal loss, the Sakshi has to bear the loss. So now credit side by abnormal loss, working note number 1. We calculated the value in working note number 1. Next, the insurance claim was settled, so that we have to take in the abnormal loss account, okay, not in the consignment. And Sonakshi took the delivery on consignment and accepted the bill drawn by her, drawn to her by Sakshi. So the bill drawn, one in consignor's account and another one in consignor's account, because Sakshi draws the bill on Sonakshi, right? So one on Sakshi's book, one on Sonakshi's book, not in consignment. So Sonakshi reported that 1,700 barrels were sold. So again, income credit side. But you have to write Sonakshi's name, because Sonakshi sold the goods, not the Sakshi. So and Sakshi, if Sakshi sells, you have to write by bank. Now the Sonakshi has sold, so Sonakshi's name 1,700 into 950. Okay. So sale, that is 1,700 into 950. Next, he also incurred following expense. Now who incurred? Sonakshi. So we have to write Sonakshi's name. You cannot write to bank. So expenses debit side, and we cannot write to bank because it is not incurred by Sakshi, Sonakshi. So we have to write Sonakshi's name and the expenses, all the expenses, okay, recurring and non-recurring. So clearing charges, advertisement and wages. Okay, next what? Next. 20 barrels of oil were lost due to leakage. So this normal loss you have to take only in the calculation of unsold units, okay? And nowhere you are recording this normal loss. So then the commission. Now on what? So you write Sonakshi, because Sonakshi will receive the commission on what? On the sales made by Sonakshi. So now Sonakshi sold 1,700 units. Total value of that is 16,15,000 on that 6%. 16,15,000 on that 6%. It comes to 96,500. Okay. So only that much. Now we'll close these consignment accounts. See, this is very easy consignment. Okay. You have to close it by transferring to general P&L account, or you can write profit and loss account. Your credit side is more. Oh, sorry. You have to record the consignment stock. Okay, that is very important. I forgot to tell. So you have to write by consignment stock. That is working note number 2. Working note number 2. Okay, after that the balancing figure is transferred to profit and loss account. The total, that is 18,11,763, and the difference is 2,49,863. So this is consignment account. Okay students, so consignment account, it is very easy. You have to see the problem, what are they given in the problem, that you are going to record. Okay, so today's class I will end till here. So the remaining ledger record we'll see in the next class. Okay, till there you just go through these formats, you study the format very well, and you see this problem, and you come back tomorrow with lots of knowledge about the format. Okay, so today I end my today's class till here. So remaining we'll see in the next class. Thank you.